VC fund first, let's say. VC fund, as a couple of you have mentioned, that it is a stage where the company is in seed stage, or it is into the idea development stage or a prototype type of stage. And maybe it has raised just a couple of rounds, and it is not just made itself established company. So at that point of time, as the name also says, venture. So the venture capital funds try to venture into those new ideas.
I will probably add is the expectation. Now, the expectation of a venture capital fund, because it's investing in an earlier stage, the expectation is determined by something called the power law, which effectively means that they'll make in volume more number of investments because the risk of each investment is significantly higher. However, the potential reward of even a small number of investments outweighs the risk of a potentially nullified investment in other startups. So a VC fund operates with a mandate that they will likely invest in more companies because they want to what we call hedging their risks, because they'll diversify the risks so as to optimize the risk reward ratio. Now, what's most important because we're talking about the VC stage right now, the role of lawyers is actually, I would say, a little bit more important here, because what lawyers do, whether they're advising the fund or whether they're advising the company, what they're effectively doing is they're co-piloting the strategy of the deal. And that implies what is the outcome or what is the risk that the fund and or the founder are trying to prevent. So let's split what the role of lawyers is for the fund and what the role of lawyers is for the company. For the fund, the primary motivation is to ensure that what the fund has represented to what the company has represented to the fund is exactly what it is. So effectively, the car does what the sticker says it does. So that means the fund needs to be very sure that under the hood, everything is kosher. And that requires a key understanding for the lawyer, a key understanding of the industry, a key understanding of the mechanics and the business model of the company, so that they can identify potential risks, which can also be identified through the due diligence, and capture those risks in a way that protects the fund from having their investments turned to zero by incorporating them in the transaction document.